By the time business trends become obvious to everyone, they are usually no longer opportunities, they are realities. Heading into 2026, companies are operating in an environment shaped less by rapid expansion and more by recalibration. Growth still matters, but how businesses grow, where they invest, and what they prioritize has changed significantly. The most important trends for 2026 are not about chasing the next big idea, but about adapting to a world defined by higher costs, tighter capital, shifting labor dynamics, and more demanding customers. One of the most important business trends to watch in 2026 is the continued shift from growth at all costs to operational discipline. For much of the previous decade, success was measured by expansion, market share, and revenue growth, often regardless of profitability. That mindset has faded. In 2026, businesses are focused on efficiency, margins, and cash flow. Leaders are asking tougher questions about which products, markets, and initiatives actually create value. Companies that cannot clearly explain how growth translates into sustainable profits are losing credibility. Closely tied to this shift is the growing importance of cash flow management. Businesses are placing more emphasis on liquidity, predictable revenue, and financial flexibility. Longer planning cycles, conservative forecasts, and stronger balance sheets are becoming competitive advantages. Instead of relying on cheap capital, companies are designing models that can operate under tighter financial conditions. This trend affects everything from hiring plans to capital investments and expansion strategies. Another major trend shaping 2026 is the normalization of artificial intelligence inside everyday business operations. AI is no longer treated as an experimental tool or a standalone innovation project. Instead, it is being embedded into workflows, analytics, customer service, logistics, and decision-making processes. The focus has shifted from what AI can do in theory to what it can improve in practice. Businesses are prioritizing reliability, integration, and measurable outcomes over flashy demonstrations. At the same time, there is growing realism about AI's limitations. Companies are learning that AI requires clean data, human oversight, and ongoing investment. As a result, 2026 will see fewer exaggerated promises and more disciplined deployment. Businesses that align AI with clear operational goals are gaining advantages, while those chasing AI trends without strategy are scaling back. Workforce strategy is also undergoing a major transformation. Hiring is more selective, and job roles are becoming broader. Companies are prioritizing adaptable employees who can work across functions rather than narrow specialists tied to a single task. Training, reskilling, and internal mobility are becoming more important as businesses try to do more with leaner teams. Stability and retention matter more than constant hiring. Another key trend is the continued redesign of supply chains. Efficiency alone is no longer the primary goal. Businesses are prioritizing resilience, flexibility, and visibility. This includes diversifying suppliers, increasing regional sourcing, carrying strategic inventory, and investing in better forecasting tools. Companies are accepting slightly higher costs in exchange for lower risk. In 2026, the ability to keep operating during disruptions is a defining competitive advantage. Digital transformation is also entering a more mature phase. Instead of adding more tools, businesses are consolidating systems and simplifying operations. Software that reduces complexity, improves coordination, and supports compliance is in higher demand than platforms focused on rapid expansion. Integration and stability are replacing experimentation as priorities. Companies are realizing that complexity itself is a cost. Customer behavior is shaping another major trend. Consumers and business buyers alike are more selective, value-conscious, and less loyal by default. Businesses are responding by focusing on retention, consistency, and trust rather than constant acquisition. Loyalty programs, subscription models, and long-term service relationships are becoming more central to revenue stability. The emphasis is shifting from one-time transactions to lifetime value. Pricing strategy is becoming more sophisticated in 2026. Simple price increases are no longer sufficient or sustainable. Businesses are experimenting with tiered pricing, bundled offerings, and value-based models that align price with outcomes. Transparency around pricing and value is becoming more important as customers scrutinize spending more carefully. Another trend to watch is the growing role of compliance, regulation, and risk management in business strategy. Regulatory complexity is increasing across industries, from data privacy and cybersecurity to labor and environmental standards. Businesses are investing more in governance, reporting, and internal controls. Rather than treating compliance as a burden, leading companies are integrating it into strategy to reduce risk and build trust with customers and partners. Real estate and physical footprint strategies are also evolving. Many businesses are rethinking office space, retail locations, and distribution networks. Smaller, more flexible spaces are replacing large, underutilized facilities. Hybrid work models are influencing how companies design workplaces and manage teams. The goal is alignment between physical assets and actual usage, not tradition. Partnerships and collaboration are becoming more common as well. Instead of building everything internally, businesses are forming strategic alliances to share costs, access expertise, and enter new markets. This approach reduces risk and allows companies to remain agile. Collaboration is replacing isolation as a growth strategy in uncertain conditions. Sustainability is continuing to evolve from messaging to execution. In 2026, businesses are focusing less on broad commitments and more on operational changes that reduce waste, improve efficiency, and lower long-term costs. Sustainability initiatives that align with financial performance are gaining traction, while symbolic efforts are being deprioritized. Data-driven decision-making remains a core trend, but with a stronger emphasis on quality over quantity. Businesses are refining what data they collect, how they use it, and who has access to insights. Better data governance, clearer metrics, and faster feedback loops are helping leaders make more informed decisions under pressure. What ties all of these trends together is a shift in mindset. Businesses are no longer operating as if stability is guaranteed. Uncertainty is assumed. As a result, resilience, adaptability, and discipline are becoming defining characteristics of successful organizations. The top business trends to watch in 2026 are not about chasing hype or predicting dramatic disruption. They are about how companies adjust to a more demanding environment. Those that focus on clarity, efficiency, and long-term value are positioning themselves to succeed, even if growth is slower and conditions remain unpredictable. In 2026, the most successful businesses will not be the loudest or the fastest. They will be the ones that quietly build systems strong enough to perform consistently, regardless of what the broader economy throws at them.